All right, good morning, good morning. Sorry I'm a little late. There's something wrong with the damn restream. I don't know if you guys have ever seen this like this before, but this is the restream, and right now I'm using Chrome. And if I hit that button right there that says share screen, it just crashes the Chrome. So I was gonna yet again try to get the morning briefing back onto the Bullish Bears YouTube page, but I guess it's not going to happen today because as soon as I hit that button, it crashes. So I don't know. Another day, another technological issue. We'll just work through the process, I guess, and do the thing. So we were up slightly more than we are now. Nothing really extreme going on in the overnight hours. We want to check financial juice to make sure that we understand what was happening over in Asia. There's nothing extreme going on today. It's around noon in Europe. It's got a really light day for today. Other than the idea that there could be some Fed speakers out there chipping their teeth, it should be a pretty quiet day today. We're sitting in a topping pattern in a lot of the market. We're in this very extreme place with the critical levels across the board and a lot of names. It was interesting when I was doing a little bit of review last night on the S&P. If you look at the run that we've had, since those COVID lows, I'm going to hide this for a moment. Snap your fib from where we ran at the COVID lows all the way up to the high, and then look at what we hit yesterday. That's 786. Talk about hitting your mark, right? I mean, that's almost to the penny. That was a perfect rejection. All right. Anyways. So a light day, really light in the volume so far this morning. Next week is going to be OPEX, be the third Friday of the month. We're still sitting in that topping pattern. Haven't really given anything up yet, but we are yet again maintaining that sideways range. Take the ES out onto the daily chart. You can see that we are now above that anchor to VWAP. And we had gotten outside of the box yesterday, but we couldn't keep it. And now this morning, we're outside of that box again. One thing that I like to do on Fridays is look at the new box. Now you got to keep in mind that the new box is not set yet. It won't set until the end of the day today at 4 o'clock. But between now and then, we can kind of get an idea of what the market makers are doing with the volatility for next week. And it seems like they're pricing us to move just a little bigger than we had the previous week. So the box is a little bit more, it's a little bit bigger, not extremely so. And through the day, it can expand, it can contract. We won't know exactly where we're going to be, but I like to see where it stands when I get up on Friday mornings. It's one of the first things I do is check that box, see where we're at. We really should or need to hold above this VWAP, this anchored VWAP from year to date. It's a fairly important level. Maybe a little bit of psychological, but also, just from the grand scheme of things, think of it as the average price on the year. All right, so we just broke back down below the daily pivot point. We had a significant move halfway through the kill zone, and we've been unraveling it since about 4 o'clock. Institutional pivot point is holding at the moment. That would be where we opened last night in the Globex. We're starting out range bound where there's a base case argument of what we can do. We can hold the range, break to new highs, and or break down and revisit some of these previous lows. Now, new highs would be new highs since this rally up off of the lows, right? Obviously, we're not sitting up at all-time new highs. There's a lot of things right now that says this really just needs to hold the line, right? We're not asking for too much out of the market. It needs to just hold the line. We've got an ADR of 1.64 with an additional market maker move of 0.46. If you use dollars instead of percentages, you're looking at around $90 move, right? And a $90 move would not be extreme. It would just be another day in the office. The base case argument at the moment is that we hold the line. We really don't have a lot on the docket today. There's not a lot of econ out there. Nobody really scheduled on the Fed side to be out chipping their teeth. So we're just expecting this market to spend the day maintaining this sideways structure inside of yesterday's price action. Now, that's a really big range. So what I usually recommend is break that down into quadrants or zones. From the low of yesterday to the Globex open, from the Globex open to the Globex high of today, from the Globex high of today up to the high of yesterday. That would be 3 different quadrants, 3 different zones that you could focus on. And all of them would be a part of the range day logic. And inside of all of these, there are various different pivot points that you could focus on. If we don't stay range bound, what else? Well, we could break out to the downside and revisit the previous week's high. All right, so right now we're inside week breakout. We broke out of the week on Wednesday and it stuck and held. We could fall back down inside of the previous week's price action. To get there, we would need to get through the ADR half at 41.85 and then the previous week high at 41.72. The likelihood of us doing that, well, our base case is that we're just going to hold the range. So that's what our main expectation is. Whether we break to the downside or break to the upside would be more dependent on the market reacting to something. On its own, I don't see us moving in that direction and breaking the lows. It's going to take some kind of news or a repricing in it. It doesn't have to be anything really extreme. It could be like when the chips in the last week or so was really giving the market hell, right? When they were saying that things had slowed down on the chip side. Demand was down. MU and Intel really took a gut punch, and it took the market down a bit. So it could be as something as simple as a company coming out with a bad earnings and a bad forward projection of what they see as the future of the market in the next few months. Anything like that could take us to the downside or to the upside. Honestly, they could come out with something really positive and give us that pop up. But those aren't the most likely scenario, right? The most likely scenario is we're just going to hold the range. What I would be focused on today is if we get near the edges, right? If we get near those lows, how did we get there? Was it a big bar and a big drop, what we call like a liquidation drop, and we just fell down to that level? Or did we slowly grind down to that level? Same thing with the top side breakout. I would set an alert near that high, see how we approach that high, and how we approach it would have a lot to do with our expectations of whether we're going to break through it or not. We do have a significant level of volume at 42.11, the cog lines. So if we fade back down to that level, it's going to be like the last resort, right? The grasping of a drowning person to latch on to anything that they can before they go underwater. When we come back down to that 42.11, we really want to see price hold the line there. If it breaks that, we get into a shallow area. We're very likely to retrace the Wednesday move and come back inside the box rather quickly. Right? I would expect that that fall would happen fast. There's a pivot point from Monday that the volume profile here shows doesn't really have a lot of support to it. There's not a lot of volume there. So sure, we could snap a line and anticipate a reaction at 41.88, but I wouldn't lean too heavy on it like it's going to provide some sort of support really of any kind. More of a just a play of first touch or a speed bump on the way down. We really don't have a lot of volume profiles to carry forward, right? We can bring over the value area low, but that's not going to hold a lot of weight. And the same thing with the value area high. We wouldn't bring through the point of control because we've already got to it. That's what we rejected off of in the middle of the night last night. Now that we've hit it, it's no longer an untouched point of control. I really wouldn't look to carry it forward at this point. There are some untouched point of controls way, way down here, but there's no reason to bring those up since there's no expectation that we would even make a move that far down. Come back to that daily chart again. Continue to really think this through. What's the market need to do? It doesn't need to do anything at this point. It's been a nice week. It's been a good expansion outside the previous week. Things are holding their levels, and the chart is not unhealthy. We haven't made very extreme, very exaggerated moves. The market just needs to take a breath, nice and easy, pause, not really do anything today. And that makes sense since it's also Friday and nobody wants to go into the weekend opening up new positions. But things can get drastic and extreme. If we break outside of yesterday's range, and remember, yesterday's range is a pretty good size range. Should we break outside of that range, it's very likely going to move very quickly. We are right on the edge of the week expected move. And if we break yesterday's low, it's very likely that we retrace where we ended the week last Friday, 41.41. Whether we make it all the way down there in a single day, well, I would expect that if we break yesterday's low, things are going to start to get a little violent out there. Should we break outside of the range, you're very likely going to see a pegged out advanced decline line. When we talk about pegged out, this is the S&P 500, and it's taking the advancing issues and subtracting the declining issues, and then showing us the difference between those two. So it'll never really hit 500, because that would imply that there literally is nothing declining, there's nothing to subtract, and that we're full up every single name in the S&P 500 moving to the upside. Now that has happened, but generally speaking, when this hits about 450, 475, we call that pegging out. It's like putting your foot all the way to the floorboard in the car. Can't really go any lower than that, right? It's the bottom of it's the floorboard. You can't push the pedal any lower, but the car can continue to speed up from there. So 450, 475, we start to peg out. The same thing on the negative side. If things are really, really bad, we'd start to peg out below minus 450. If we were to break outside of the range today, we would expect this to start to peg out, because I really think it would take that much of the market to make that kind of move today. Same thing with the NASDAQ. This is the NASDAQ 100, and it's taking the advancing issues and subtracting the declining issues. So while we would rarely ever hit an actual 100, getting beyond 75, getting into like 85 or 90, that would be pretty extreme. That would be pegged out. So we would be looking for those kind of signals, very extreme signals. If we're going to break out of the range, we would want to see the green line leading the way. You can see yesterday, for an example, the green line was never leading the way. Or I should say, it was leading until 10 o'clock, right? Then it started to slow down a little bit. It got below the purple, and then it stayed in between these two lines for the rest of the day. If we're going to get crazy bullish, we'd want the green line leading to the upside. Crazy bearish, we'd want the green line leading to the downside. It's just the way it is. We would expect to see that the move would be driven by the fangs or the monsters of tech. So we would want to see an inside day breakout on the NY Fang, either to the upside or the downside, matching whatever bias we're seeing in the S&P. We'd very likely lose financials. So we would expect XLF or KRE to also make that same inside day breakout. We'd want to see the ticks pressing down into the extremes, a minus 1,000 if we're bearish, a positive 1,000 if we're bullish. You can see yesterday, just past or just before 3 and after 3, we pegged into minus 1,000. Well, go back to the ES and look at that move to the downside yesterday. During all of that move, we had not seen a big bearish signal. We did not hit that negative print. It didn't happen until the end, when it started to signal that we had already traveled really far and that the move was just about done, right? It was more of a capitulation or an extreme at that point. So this is completely different than what I was talking about. During this move to the downside, it never got extreme. So we never hit the minus 1,000. When we hit the minus 1,000 here, it was more of a reversal signal than a continuation signal or a validation of bearishness. The reason I bring that up is because yesterday it never really got extreme. All we did is basically reset where we had been the day before. Today, though, if we start to break out below yesterday's low, we're going to want to see that done with signals. All right, we're going to want to see some real negative market sentiment, or positive if we break outside of the upside of yesterday. We're also going to want to maintain whatever side. So for bearish, we're going to want to see this staying mostly in the red with very little crossover above the 0 line. And if we're bullish, we're going to want to see it stay mostly in the green with very little crossover to the red side. Reasonably decent move in Tesla in the overnight hours. It's given most of it back, but we're still showing that it's up nearly 0.75%. Facebook as well is on that list of a gapped up market. PayPal and Nvidia and Amazon. Google is right on the edge. It's right at that 50%. And then below Google, the rest of these, Apple, Comcast, Adobe, Microsoft, they're not yet at that 50% mark. And 50% is like the benchmark. I want to see that we're up at least 0.5%, or we're down at least 0.5% before I start to consider that bullish and bearishness. So right now we're going to be looking for these names as we come into the open to challenge and test their Globex highs, or to break out of the range of yesterday and start to expand. Those monsters of tech are very likely going to drive us if we break the range to the upside of the downside. Otherwise, if it's just the other 90% of the marketplace, we're going to expect that 90% to just hold the line. It's a pretty simple day, right? Friday. It's been a good week. We don't have a lot of expectations that the market's going to do anything extreme, and we really don't have a lot on the docket for economic events. So just a quiet day. Expect that if we hold the range, that a lot of these names are just going to get chopped up, that there's not going to be a real nice expanding trade opportunity. Now, I just got a new video made on the scanner that I use on the intraday to find opportunities. I'll be submitting that over to the Bullish Bears team to get it uploaded onto the website. Should end up in the next level, maybe over the weekend. I don't want to put a timestamp on it because, Angel's as busy as the rest of us, and she'll get to it when she has time, right? So I don't want to necessarily say how long it's going to take before that new video will show up. And it's a part of a series, so it'll be the first video out of probably 3 or 4 videos explaining what the scanner is that I'm using, the settings that I've got it put at, and over the next few videos, we're going to bring in how to validate things with unusual options activities so that we can see the signal in the chart. We can see the flow hopping into the scanner that brings the ticker to our attention, checking the flow, and then finding the trade opportunity. So that'll be something to look forward to for you options traders out there. Everybody, have a good weekend. Be careful, be safe. It's my day to stream, so I'll see the rest of you at around 9 in the Stock and Options channel.